Welcome back to Golden Rule Radio. Today is March 15th, 2017. An exciting afternoon due to the Federal Reserve rate hike that we just witnessed this afternoon.
Gold's up.
Gold is up. A lot of markets are up and down and all around.
Silver's up.
I'm going to ask you
Dollar's
guys.
not up.
Dollar's not up.
Dollar ran into resistance at 102, didn't it?
Bond yields are not up. Let's get into, though, this rate hike. Tell me why.
Well, I think, first of all, she told us she'd raise it, so that's kind of nice to have that foresight. I think Yellen is looking at future projections, not what we've seen over the last couple months, because nothing's really changed.
I totally agree.
So they're saying now we have inflation concerns, which I find interesting. We just left the most inflationary president in history, while they were saying the whole time it was deflationary concerns keeping the price down. So I'm not really sure what's changed there, since we're spending the same amount of money.
I think a lot of it, too, just has to do with looking at what Trump's intended policies are, both from a tax policy standpoint, spending, budgetary concerns. And we talked about that in our January show, where we said, okay, if he is successful, what do we see happening in the economy? And obviously the Federal Reserve is banking on some successes here because they're pricing that in, if you will.
So do you think the Fed Reserve is expecting Trump to be a more fiscally stimulating president?
I would say absolutely, because in the press conference and in the comments after the, in terms of the meeting minutes, one of the primary motivations was stated as being rising expectations for U.S. growth. That speaks exactly to your question on will Trump stimulate from a fiscal and economic standpoint. When we discussed the impact that Trump could have on the economy, one of the things that we did point to in terms of impacting metals is inflation. And that does come with an economic turnaround. We've been waiting for the white metals to catch gold for years now. And the reason they haven't been, as we mentioned before too, is the deflationary concerns. Well, if you get true economic turnaround and inflation getting legs, that's why we also foresee the white metals outpacing gold.
Well, and if you get that true economic turnaround, you're not going to need the inflation that we've seen over the last 8 to, 16 years, if we go back even to Bush 2 era.
So all that being said, what's been the afternoon reaction market-wise to the Fed announcement, Robert?
Well, I'm glad you asked, Tori, because I'm actually really focused on that. I was telling clients earlier this week, the last 2 rate hikes were in December 2015 and December 2016. If you look at a chart of gold, right when the Fed raised rates in December 2015, it bottomed at 1,050, almost to the day.
That's right.
It then rose 30% in the next 6 months. Then the next rate hike was December 2016. Gold bottomed again around 1125, almost to the day. And then it has risen about 12% from there. It pulled back into the 1200 range, like what we talked about yesterday or last week. And last week, if you remember, we told you this was your opportunity. So today, here we are with another rate hike, and gold's up $25, silver's up 3.5%.
It's funny you mentioned that, because Tori and I were talking right before we started recording, and I was looking at a couple things on the silver chart that I might point out here in a minute when we get to the metals. But it's difficult for me as somebody who likes the technicals, likes assuming somewhat of a free market and somewhat of the efficient market hypothesis. When you see some of these price moves taking place just before or just after these rate hikes or major Fed announcements, when you see a massive price move happen right 5 minutes before this type of announcement, like we saw in the silver market today, and when you, as Robert mentioned, you see these bottoms on these ABCD waves come to Fibonacci level corrections right before you have these types of announcements. I'm sorry, but that seems like a little bit of insider trading knowledge, or at least manipulation of some sort.
Yeah.
So it's hard for me as some guy, out here in the middle of nowhere who just likes looking at charts and figuring out what the market's going to do, to not get a little ticked off by that.
Well, what you're saying is it's not just the stars aligning.
No, not at all. In fact, quite the opposite.
Right. There's always human intervention.
Definitely.
Yeah. Well, I'm going to briefly summarize what's going on here in terms of this afternoon reaction with the metals. Gold's up 1.84%, to Robert's point, up $22 to $12.21. Silver's up 2.8%, up 47 cents to $17.35. So we'd seen us crossed down below that 17 figure, and that 1675 held. Up 1.82% in platinum, which is $17 in an increase, up to 954 per ounce. And palladium's at 764 an ounce, which is up 2.7%. So palladium and silver acting similarly. Again, per our inflationary projections, that's exactly what we would expect to see happen. So that palladium $20 move up, very, very strong.
I don't think anybody actually thinks inflation is 2%, though.
No, and that's sort of a global, what they're saying too is you see a global 2.3% inflationary number in terms of last quarter. And as Miles pointed out, this Fed rate hike, if you look at the data from the previous 3 months, nothing's changed. This has everything to do with projections. And we know that the inflationary rate in the U.S. is actually higher. It depends on the category, right? The sector that you're looking at. Some deflation, some inflation, but primarily inflation.
Well, and 3 months ago with identical or near identical data, we have deflationary concerns. And today, 3 months later, with identical or almost identical data, we have inflationary concerns.
Didn't we mention something a few weeks ago about the inflation rate, the expectation of inflation, 5-year expected chart? Didn't we mention that?
Yeah, we did. And we talked about March. Now, all of a sudden, remember the percent spike to a 33% opportunity, or I guess I'd say a 33% chance of them raising rates in March, and June had shot up to 100%. Now those have flip-flopped. Now we're obviously at 100% in March, and the possibilities have dropped to below 30% for a June hike.
Hey, you guys remember in the book 1984 where there's that line about like, we're at war with the West now, so we've always been at war with the West, but as soon as we start being at war with the East, we convince the public we've always been at war with the East and we've always been allied with the West. It's the exact same thing. It's just whatever we're told to believe, we believe.
You do.
So get us into more of a week-long view from the last show on those metals. I know I just gave a short-term little response, reactionary summary, but what about the last week?
Sure, we'll do this real quick because I know we've only got so much time. We talked about the support levels on the gold at the fib around 1,200. Those seem to be holding. And if this move up continues that we had off the Fed announcement today, I think we could see the C wave rise potentially starting, which would be the move that we'd all be hoping for.
This possibly could be just a simple reaction to the Fed rate hike, but I don't really think it is. I think we actually are seeing strength to the gold market enough to say that it's gaining more momentum.
Well, and remember what Robert said a minute ago, too. We showed market lows on the day of previous rate hikes. Remember that fact.
Well, and again, to the point, you would expect that with a rate increase, the dollar would rally and gold would decline. Right? Just like you talked about in December of 15 and 16. It was either priced in or technically everybody knew that this was just a temporary, very short B decline.
Yeah, the dollar's run into that resistance at 102. Thanks for speaking for me, Tori. It's down big time to 100.5.
Yeah, no, that's, it's over 1%. And, we're a little bit closer. We're just barely over that 100. If we don't break down below that, maybe we hold, right, Miles? You still have an opportunity of seeing your 104.
104, it's coming.
It's stuck in a range. It's going to break out of this range north or south, and that'll be the next direction. The dollar index is, so everyone knows, very heavily weighted on the dollar-euro pair. About 57% of that dollar index is made up strictly from that euro-dollar. We could talk about a lot more in today's program, but I think have all had a really busy day, and you will see why if you look at the metals market. So I think we're going to wrap up here, right?
So I agree with you, Robert, but before we leave, I want to ask one tough question. Would you or would you not assume that with a Fed rate hike increase, we would see the dollar up, the metals down, the stock market down, bond yields possibly up? Every one of those markets is reacting oppositely. Why?
Yes, I would agree with that, Tori. And I think it's because the Fed is putting out in front of the market what they're going to do. And so the market prices everything in. They know what's going to happen. So it's somewhat buy the rumor, sell the news.
So the Fed has become more predictable, but the markets have not necessarily become more predictable. Again,
or maybe they've become predictable in the opposite way of what they should be predictable.
There you go. Is this the new normal?
Seems to be.
So that being said, the Dow up half a point, up 112 points to 20,950. We'll see if we rally over 21 again. Dow Transports doubling that, much like the white metals are doubling gold, up 1.16%, also up about 106 points. So with that, we're going to wrap up this week. Tori, Robert, and Miles, thank you for tuning into Golden Rule Radio again. Please send us your questions. Make sure to follow us on Twitter as well at ICA Gold, and subscribe to us. Click the subscribe button below to subscribe to us on YouTube. But most importantly, give us a call, 800-525-9556, so we can walk through your individual portfolio with you. Tune in next week, and thanks.